Hey guys, David from the Trade Study here. Wanted to do a quick video on selling put options versus buying shares. Selling put options is a way for an investor to potentially own the stock at a future date and at a much more favorable price. It may also be referred to as writing a option, and that is the same lingo. Selling put option, writing put options. So let's jump right into it. First, we need to talk about buying shares. Buying shares is something that we're all familiar with. You buy the shares at a market value or at a limit price, and that is guaranteed to deliver shares to you at the executed price. Now, when you sell a put option, that's a little bit different because you are obligated to buy the shares at the agreed strike price. This is the option that the options buyer has to exercise their right. So, in other words, you are going to make money here. That's the guaranteed by collecting the money that you sold the put option to the buyer. That's the premium you get to collect. That's your extra income. But it does not guarantee you that you will receive shares. But if exercised, you may get a discount depending on how the stock trades. You get to keep that premium that you collected, and you get to own the shares at a discounted price or at the price that you desire to buy the shares at. Quick few things to remember here before we jump into an example is that one option is equal to 100 shares. Selling an option, a credit is collected. Buying an option, a debit is paid. If exercised, you will need to purchase those shares at the agreed strike price, so make sure you have funds ready to go. Let's look at an example here on Thinkorswim, TD Ameritrade platform with a stock here called UAVS. So I'm going to pull up the option chain here, and without looking at the chart, fundamentals, technicals, all that, we are doing a educational video here. This is not a recommendation. I want to show the difference between buying market shares at this point versus selling a put option. And as you can see, we do have the stock price here at $5.46, and I'm looking at May 21st, 2021. About 13 days to go before we reach the expiration date on these contracts. I like this $5 strike price put. I can get these for 40 on the bid, 40 cents. So I would go here, right click, hit sell, single, and then this should pop up on the bottom. It comes up with 10 contracts. We can use 10 for this example. That's beautiful. So 10 contracts at 40 cents is going to give me $400 in credit. Remember, a options contract is 100 shares. That's how we're getting that number. And if you hit confirm and send, you get this really nice summary right here that breaks it down for you. And we'll work through it. The break-even stock price is $4.60. How do they get this number? We take that strike price at 5, right? And then we take this bid at 40. That is how much the difference is. We take 5 minus 0.40. We get a break-even stock price of $4.60. So the max profit on this trade is going to be $400. It's going to be the premium that you collect. What would be the max loss? Well, it would be $4,600. How do they get this? Well, remember, 10 contracts equals 1,000 shares. 1,000 shares at a strike price of 5 would give you $5,000 minus the max profit of $400. So your max loss would be $4,600. That's how they get that number. They also have some other numbers here, but that's with the simulated trading account that I have here set up. So if we look and we purchase these shares at, let's say we just buy them, market shares, at $5, right? We buy 1,000 shares at $5, which would give you $5,000 that you're paying out. If you were to sell the put option here for $5, you would be getting probably a little bit more premium than 40 cents, but we'll stick with the 40 here to keep the example safe and simple. You would be getting $400 in profit already from just selling those contracts. So when you look at this example, selling the put option, you are actually saving close to 10% on this stock purchase. This strategy works really well with stocks that you really want to own and that you're patient and hey, I can take some instant profit by selling these put options. And if I don't get the opportunity to own those shares, then hey, you know what? That's okay. I can do the same thing again the next month after that. Keep on collecting premium from those buyers until I get exercise, and then I can own those shares at the price that I agreed at on the stock option. So guys, I hope you enjoyed this quick video. If you do have any questions, please let me know. You can visit me at thetradestudy.com. I have a podcast set up there where I talk about different topics with investing in the stock market. And guys, I love the feedback I've been getting. And thank you for the support. Throw me a like or follow, and I will see you in the next one.